Hello and welcome back to another episode of the Daily Crypto Byte. Today is Thursday, May 5th, and quite the sell-off here to start the morning across the board in both traditional equities and Bitcoin. But that's coming after a nice move yesterday following the Fed meeting. So plenty to dive into today from a technical perspective. Before we get started, CJ, how are you doing today, my friend?
Doing well, Monty. Yeah, that entire move from yesterday is kind of getting wiped as we speak. DXY, wow, what a move. I think it's up
Right.
about, let's check,
And the TNX as
roughly.
well. 10 years back above 3. So some critical
And
levels being broken here.
yeah, I want to talk about oil as well today
Yes.
because we're starting to see a new construction within that trend. We've been talking about a descending triangle and just oil's inability to create a higher high. It's actually done that today for the first time in quite a while. So that might be the start of a new bullish run for oil, trading at about 110 right now. So we'll see. But yeah, how you doing, Monty?
Doing well, CJ, doing well. There's been lots of excitement in global markets, not so much crypto, though. I mean, even yesterday, Bitcoin didn't move much. It's kind of just holding in there, around that 38, 39K level. But lots of excitement in the Forex market. I know you've, dove into that head first. And also, with the rates as well, what we're seeing with the 10-year Treasury yield back above 3%. That's something I didn't expect to see here so soon, especially after yesterday's Fed meeting. So excited to dive into things, take a look at some charts. Would you like to start us off today?
Yeah, for sure. Actually, I gotta go do some. I gotta do some system preferences.
Okay, I got you. I got you. I want to start with Bitcoin because, like I said, it didn't really move all that much yesterday, but today we're actually seeing a lot of movement in the altcoins, and it's kind of overshadowing what we're seeing in Bitcoin. But for Bitcoin specifically, yesterday was a relatively solid day where we moved from 37.8 to about 39.6. That's kind of getting faded this morning, but I think a lot of that has to do with what we're seeing in traditional equity markets because even before the markets opened up this morning, we saw Bitcoin pulling back. The Qs were down in pre, same with the NASDAQ. And now, as you can see, they are really kind of wiping away all of those gains that we had from yesterday's or following yesterday's Fed announcement. So that's just something to keep an eye on here. Obviously, we've seen an intense correlation between specifically the NASDAQ and the crypto market. And with the altcoins specifically, you can see on days like today, when the Qs are red, when the NASDAQ's red, we see tremendous sell pressure in the altcoin market. But the other side of that coin is like yesterday when we saw, some positive price action in the NASDAQ and the Qs, we saw some really nice price action in the altcoin market. And one in particular that I actually wanted to mention was AVAX. AVAX was one of the biggest gainers of the day yesterday. And one thing that's really interesting about AVAX, and we've talked about this over the last, couple months here, is how tightly it's been correlated to Bitcoin. Most alts, like if you look at Luna or if you look at Solana, even, they don't necessarily look like the Bitcoin chart. But AVAX for the longest time had been very tightly correlated, not exactly behaving like an altcoin, more or less behaving like Bitcoin. That was until just a week ago when we broke down. But now that we kind of made that bottom here, AVAX does look like it wants to, come back to parity with Bitcoin. I think that's one of the reasons why it was one of the bigger movers yesterday. And I think we could see a potential continuation of that trend. But, right now it just has everything working against it from a macro perspective. Like I said, the TNX, the 10-year Treasury note, getting above 3% is very concerning. A lot of people were hoping that we were seeing a top yesterday, that, with that Fed meeting that these rates would come down. Not at all what we're seeing here today. In fact, back above 3%. And like CJ hinted at, the DXY, you can see basically this reflection of, risk on yesterday, back to risk off today with the DXY returning back to those highs. So, lots of signs that today seems to be risk off, but that could all change very quickly. So, CJ, are you back yet, my friend?
Yeah, backstage, waiting for you to add me back in. Sorry about that, though. All good now. But yeah, ready to take a look at some charts. Thanks for that overview of the NASDAQ and DXY.
Yeah, of course. And yeah, I think Eric Murphy's, got it right here. It seems like it was kind of a buy the rumor, sell the news type event. Right after the meeting was over, it started to rally. But since people really fading that move hard. So yeah. But what are you looking at here today, CJ?
Yeah, I was just going to pull up a chart. If you could add that as well to the studio, thanks. Yeah, so ARK basically giving back a lot of the gains from yesterday. However, you may see something. I mean, I think you got to respect the trend and the strength of this down move until further notice. But, we are at a very critical support level, and we are starting to form somewhat of a tentative bullish fractal at the bottom of a downtrend. The only thing that kind of stands out is this one candle right here. Man, I gotta change the settings a bit. But that's the point. Other than that, I mean, you still have the construction of kind of the rounding bottom in place. But let's take a look at oil because, like you had mentioned, Monty, I think the fundamentals between oil, DXY, and rates are going to be very important. So we've been watching this for quite a while now on oil, and we've had this descending triangle broken, but now we've actually consolidated at that level and have made a new higher high. It'll be interesting to see how this closes today. It would be kind of tentatively bearish if we got a close with that kind of hammer candle with the momentum finishing down. Nonetheless, this is something that is very important to a lot of things in the market, including risk on assets. And, if we have even another higher high, this might be a trend to continue to play as opposed to some of the riskier assets like crypto. But overall, I think, when you look at these relationships and you look at the assets that are trending and the assets that are weak, these relationships become like very, very clear in almost like an interconnected system. But some more assets we can discuss as well. I also had some info from Into the Block on Cardano and their addresses that they've been seeing. We can get into that, but is there anything you'd like to share prior?
Yeah, just one thing I wanted to quickly hit, and that's on the back of a comment from Mr. Chris Vincentini. Starting to see some liquidations over the last hour, and yes, I did notice that as well. If you check out CoinGlass and their liquidation data, as you can see, really this morning it kicked off in the last hour. We saw some long liquidations coming along with that down move. It seems like they're kind of stopping a little bit here as we pull back to the 38K range. Not too many longs left to be liquidated, so hopefully that stops acting as a catalyst for negative price action. But as you can see yesterday, lots of shorts were squeezed out of the market following that Fed announcement, basically immediately following that. And, actually kind of leading up to it as well, we saw some shorts liquidated that really propelled price higher. So, obviously still lots of leverage in this market. And that's not too surprising given the fact that we're kind of at a tipping point right now where, people are trying to decide if this market's risk on or risk off. When you're trying to catch that flip, there's a risk of being liquidated. And I think we're seeing that this morning. So, yeah, good point, Chris. And thanks for pointing that out.
I think another thing that you have to keep in mind following those liquidations is that the shorts, when they get liquidated or whenever they have to cover their shorts, that acts as fuel for the rally. And so once you have all of those shorts squeezed out, it's kind of like, all right, now we need some more authentic fuel as opposed to, or some more authentic buyers to step in and push price higher as opposed to just shorts getting out of their positions because they're being forced to. So.
Yeah, agreed. And one thing that, although like you joked at the beginning of the show, a lot of the gains are just being wiped away from yesterday. I still think we can take a lot away from yesterday because I think some of the assets that will be the best movers when this market goes risk on showed some of the best signs of performance yesterday. AVAX being an example, it was one of the best performers of the day yesterday. I think that's because it's currently undervalued and, the market wants that thing to go up. People are looking to buy that. And as soon as the market flips risk on, as you can see from yesterday's price action, that thing can really run. So although it's being sold into pretty hard today, I still think that that we could take away a lot of information from yesterday's price action.
Yeah, I mean, and I think the same goes for true for today. Like, what are the assets that are down the most? KNC is one of them that comes to mind. I'm sure there are many others, but like, it's an interesting dynamic. Whether you're going short the weak assets or long the stronger assets, I think when you're in like the opposite trend, it's very important to pay attention to which ones stand out. So, but yeah, I want to get to this. I want to get to this Cardano metric.
Yeah, Cardano was another one that had some really nice price action yesterday. Kind of caught some people off guard.
Yeah, so here I have some data that I'm sharing on Twitter from retail interest and Into the Block. Definitely an interesting data provider. But I thought this was quite interesting. The balance held by traders or addresses holding for under 30 days has increased by 186% in just 30 days. And these addresses now hold 36% of the overall ADA supply. So a lot of the ADA supply is ultimately being held by shorter term holders, um, which could be interesting for a interim trend to develop. But then again, what would you rather have if you were investing in a project? Would you rather have 30% of the supply being held by shorter term holders, or would you rather have it from long term holders? Whereas we're seeing more long term holders in Bitcoin now than ever before. Um, I don't know. It'll be an interesting trend. Getting a little bit of rejection from the zero line here in the RSI, but still very oversold and starting to see that bullish crossover on the MACD. Last time we had it, back in February, led to a nice uptrend that was ultimately when Bitcoin went back and tested roughly 45. So it'll be interesting either way. But any thoughts on ADA?
Yeah, we've been critical of ADA in the past. I still don't hold any ADA, but that's one thing that is for sure is in the past it's been a retail bastion. Every time the retail crowd comes in, they do speculate on ADA, and I notice that even anecdotally amongst my friends, like that is one of the first ones they always ask about. It is at the forefront of the mind of retail traders, and as a result, it tends to pump when they are participating in the market. But right now, it does feel like we're a long way off from those waves of retail mania that lead to Cardano performing well. But that is something that you need to watch. Like at these current levels, are they still adding active addresses? Is there still demand even when the market is tepid right now? So yeah, I think that I'm not going to buy Cardano anytime soon, but maybe when that retail crowd comes back, I'll take a look.
Yeah, speaking to the shorter term holders, that kind of reminds me of some longer term data models that we could potentially take a look at, specifically with unrealized profit and loss. Just give me a couple moments to pull it up.
Yeah, is it from Glassnode?
It is from Look Into Bitcoin, but I
Oh,
do
okay.
believe Glassnode probably has something very similar.
Yeah, I saw in their weekly report. But yeah, Look Into Bitcoin has some really nice data.
Yeah, so this is quite interesting where we're at right now. Um, Based on sentiment and relative unrealized profit and loss, we're kind of in optimism or denial. So, I think you have to take into account, where we are in the market cycle in this overall chart. So when you're coming down from a recent move, I think it's probably denial or a mix of optimism. Either way, uh, the point is we're not really overheated to the upside. Obviously, I mean we've been going down and oversold for quite a while. But when you look at these relative like unrealized profit and loss and where we kind of end up or have lined up historically, um, you know, each successive bull market, or I guess bear market, I should say, has had fewer relative unrealized profit and loss. In other words, we don't come down as far as we came down in 2015. Even when we went from 6K to 3K in 2018, we weren't at that level of unrealized loss. So, and then again, you can see that we touched that relatively, following the March COVID lows. And, we still are in that relatively neutral territory and could potentially go down a little bit more. But overall, we're kind of in neutral territory when it comes to relative unrealized profit and loss and the broader things of the market cycle. One thing I guess you could notice or take from this, if you want to compare this current time to the summer, we are reaching lower levels, which I think is quite interesting. I think it shows that people have been buying the dip all the way down and are still kind of underwater because, the the unrealized losses are lower now than they were in the summertime when we had come down from 64K roughly to 30K. So it's really interesting. We didn't even touch these lows of 29 or whatever we hit in the summertime, yet more people are underwater from buying this top roughly at 60 or 70,000. So just a interesting observation there, but still in neutral territory overall when it comes to unrealized profit and loss in the collective market participants.
Yeah, and I think that neutral territory is kind of manifesting itself in this sort of neutral price action that we've been seeing. There's just not too much profit or loss to be sold into right now, and as a result, Bitcoin's kind of just trading sideways, waiting for genuine buy or sell pressure from new participants in this market. So, good stuff there. Thank you for breaking that down, CJ. But I think that is all we got for today. As always, thank you guys so much for watching. We will be doing our members only Doge of the day right after this, where we break down some of our trade insights and go a bit more in depth with specific assets. If you would like access to that, you can join us at the link below in the description, marketrebellion.com/try crypto. And please don't forget to like and subscribe. It really helps out the channel. But that's all we got for today.